It's Thursday, March 11th, 2021, and today we'll be talking about Wealthsimple focusing on Canada, Dialogue dials up an IPO, Wrapbook wraps up $27 million from A16Z, Snapcommerce snaps up a large round, plus some late breaking news from Shopify at the end of the show. If you've been following This Week in Canadian Tech News and maybe have a guess, leave it in the comments wherever you're watching or listening. And if you get it right, we'll get you a free 1-month TechTO Insider membership. Of course, that offer is for live listeners only. We'll also be reacting to your questions and your comments throughout. So give us a thumbs up wherever you are, and let's get started. Are you ready, Alex?
Sure am.
You are born ready. Look at the enthusiasm. Look at that smile. All right, first up, Wealthsimple focuses on Canada. By now, Alex, I'm sure you also agree everyone in Canada knows Wealthsimple, but they're growing fast and they seem to be releasing new products all the time. Where'd they start and where are they now?
Well, they started in Toronto and started by Mike Katchen and basically since early onward backed by the Desmarais family. They started off as a robo-advisor. They built a huge brand, invested in it early, and they won many traditional, non-traditional consumers. And they've launched many traditional, non-traditional consumer financing services such as no-fee trading accounts, crypto trading, a checking account, peer-to-peer accounts, a tax filing service, and a bunch more.
Okay, so that's a lot of stuff. How big is Wealthsimple now, Alex?
From what I've read, and you can verify this, Jason, they have about 10 billion AUM in Canada. They've raised $114 million in funding. I don't know, probably a couple hundred employees.
Give me that valuation. What do you think?
I think north of $1 billion.
There you go. Okay, so what's news today? Lots of new products, high valuation. What's making the waves?
Well, they sold their United States book of business. 200 million of AUM sold to Betterment, which hypothetically is a competitor. It's another robo-advisor. And so they basically have exited the United States.
And what does that exactly mean? Like, is it because of GameStop? Are they halting trading on GameStop and they're being investigated by the U.S. Securities Exchange Commission, or what's going on?
Oh, I think the Americans want to buy Disney, and I don't think you can buy Disney on Wealthsimple Trade.
Okay, you're airing all the dirty laundry.
My daughter keeps on asking to buy it, and I keep on saying no, and she cries. Look, it's an interesting play. I think if you look at what Wealthsimple's doing over the last couple of years, they're starting to concentrate on the Canadian consumer business. They've exited the US. $200 million is what, 2% of AUM. So not a huge amount. It's probably a distraction. They're saying, let's focus on Canada. And if you take a step back and look at 2020, they sold their business-to-business division to Purpose Advisor Solutions. So what to say? Hey, we've expanded rapidly. We've tried lots of different things. We have a core ability to get Canadian consumers to interact with our financial service products. Let's remove all distractions.
So if they're removing all these distractions and focusing on the core Canada consumer offering, what do you expect is going to happen next? Like if you're in the board right now and you're doing some strategy sessions with the executive team, what do you think is coming down the pipeline at Wealthsimple?
Well, I assume it's remove anything that's not part of the core focus. So from what I understand, they're in the UK. I assume they're probably looking for an acquirer for the UK book of business right now, and probably expansion, more consumer finance products. Maybe a credit card, anything else to get a larger share of my wallet. Literally.
Literally Alex's wallet. What share do you think Wealthsimple has of your banking relationships, Alex?
3%.
3%. Look at the growth opportunity for Wealthsimple there. You know, the coveted 97% of Alex's wallet is up for grabs.
You know, I'm not your typical Canadian consumer. And I think this is very different from Canadian perspective and American perspective in the financial consumer play. I think Canadians are very loyal to one financial institution, and they get a high share of wallet compared to you see anywhere else in the world. So maybe you'll get 10% of my wallet because I actually deal with RBC, TD, Scotiabank, and EQ Bank. All have business. I purposely diversify because I don't trust any Canadian bank or financial institution. But I think most Canadians are not like me.
I would agree. I would say most Canadians are not like you. Most people are not like you. All right.
Thanks.
And so if you're part of the TechTO community, you've seen Mike Katchen speak at TechTO as far back as December 2014, and you're interested and you've been following the journey. But why is this news in particular interesting for you?
Well, I'll start with the positive first. When you go to raise money, when you start a company, one thing you hear often from angels and VCs is a Canada-only play doesn't work. So what we're seeing here, Wealthsimple is a Canada-only play, and it's in consumer finance. So it disproves, at least for consumer finance, that a Canada-only play doesn't work. If you also look, there's Borwell, who seems to be doing well, focusing on Canada. So the Canadian financial consumer market is big enough to make a VC scalable business. That's
Well,
the first thing.
the economics of the Canadian finance landscape and the U.S. finance landscape are very different. The competitive forces are different. The regulatory forces are different. Ultimately, it's probably not structurally good for Canadian consumers to have the high fees that can support standalone Canadian fintech players. But it could be good if it drives innovation and it drives more competition.
Well, I'm going to actually go on a tangent here because I think what you said there is actually something that's historically hampered Canadian startups. The Canadian ecosystem is so different, and what you take for success when you have a bunch of oligopolies, the competition is much lower. So you've seen this across the board from consumer to enterprise SaaS companies. They compete, they get what looks like product market fit in Canada, then they go to the States and they get their ass handed to them. Facebook ads cost more, there's more competition, there's less regulatory hurdles. And so we actually can incubate companies in Canada, and then when they go global, they have a lot more roadblocks than they expect. And I think that's one reason also VCs have historically said, well, Canada's a small market, because what they're basically saying is, we don't believe if you succeed in Canada, you can succeed globally.
I think that's a fantastic tangent, an insightful tangent. And you know where else you can find more of Alex's tangents?
Where?
It's the TechTO newsletter. If you love that tangent, you have got to subscribe to the TechTO newsletter. Keep up to date on the people and the companies shaping the technology ecosystem here in Canada. Alex, what can people expect from tomorrow's edition of the TechTO newsletter?
Tomorrow's edition is going to be jam-packed full. It's going to have a detailed overview of a company called Sherpa. It's going to have a detailed overview of Backbone Angels, the news you need to know, the quick takes you need to know, some other stuff you have to read. So it's actually going to be a long email, but very insightful, I think.
I love it. That's a good tangent. All right. Next up, Dialogue dials up an IPO. And Dialogue and Wealthsimple are related, aren't they, Alex?
Yeah, they are. The Mare families are in both via different vehicles. I think Dialogue was spun out of Diagram. It's 5 years old. It's Montreal based. It's one of the largest telemedicine companies in the world.
In the world? How do we measure that?
Well, that's self-reported, but they apparently have 2.5 million Canadian customers. So it's showing the hurdle's not high. And actually, if this is a story that we don't think explicitly have to touch, but it is a COVID-related story because telemedicine was not really popular a year ago. So right. I think the world's leading telemedicine company maybe had a couple 100,000 customers, in 2018 or 2019. So right. 2.5 million could easily be one of the leading ones. Again,
we spoke about the structural interesting points of the Canadian consumer finance industry. Is there same sort of structural advantages or disadvantages happening in Canadian healthcare as well that are either tailwinds or headwinds for Dialogue?
I'm not sure. And I don't know if this is a Canadian healthcare story, because what they are is really a platform that allows you it's basically an administrative platform and access to different programs. So if you look at it, if you're an HR person, it reduces the administrative burden, increases the healthcare options, and reduce costs by hopefully pushing you to telemedicine instead of going in person, providing preventive medication, which hopefully you comply to. So don't really think this is not like you're providing hospital care or single payer. I think it's more of a platform that can probably operate anywhere.
Got it. And so we have one of the global leaders in telemedicine here in Canada, out of Montreal, related to the Desmarais family of companies, and they're raising money. So, why is that news?
Well, they haven't raised it yet. They've announced they're going to go public on a TSX. They plan to raise 100 million. They're expecting the valuation of the company to be 500 million before the 100 million is issued. So you're looking at a company that's going to go public, be worth 600 million, have raised 100 million of those dollars by going public.
So would this have been traditionally a later stage VC round just a year or two ago? Is there something changing here that they're IPOing at this stage?
I think there's a few different things here. First of all, Canada's always had a lot of companies go public really early. I wouldn't say this is one of them. It's not like they have 2 million revenue to go public at 20 million. But I think this reflects this is still smaller than the companies you see going public on via SPAC or generally in the States. You're talking about raising at a 10 billion valuation, a 20 billion valuation, or SPACing at a 3 billion. I think this just reflects the current public market valuations are hard and private market valuations.
Mm-hmm.
This reflects the demand for TSX and Canadian investors to have local companies to invest in. So there's probably an argument saying the time's right for us to go public. Maybe growth is as good as it's going to get. Don't know. Not making a call. Just no discussions on that. And there's demand here. We can probably get a higher valuation by being public now than in 12 months, and are probably higher than we can get from VCs.
Right. And there's also the liquidity play. So there's going to be some people who are going to profit from this. So I'd like to know, who is Alex going to be targeting as LPs in his next fund? That's what I want to know. Who's going to profit from this deal?
Well, I have you already, Jason, so it's hard to top that.
You got to think bigger, Alex. You got to think bigger.
So the team here don't know what they own, but the CEO, Sharif Habib, CPO, Anna Schiff, and CTO, Alexis Smirnov, I think have been there right since the beginning. They're probably going to make good money. The studio Diagram, so that goes back to the team running Diagram, goes back to the LPs, including the Demare family and other investors. So the two biggest investors are Sun Life and White Star Capital, who combined own about 32%. And who also will make money off this is all the Canadian banks helping them go public. National Bank, RBC, Scotiabank. But traditional fees for an IPO is about 7%. So they're going to split about $7 million on this.
And maybe Wealthsimple is going to also make some cash on it as people buy and sell the Dialogue stock on Wealthsimple Trade.
There you go.
Oh, sorry. It's a zero fee platform, Alex. You should know better than that.
Okay. Is Wealthsimple paying you to promote them? Where's my
in a roundabout way. So if you're part of the TechTO community, you've been following the journey of Dialogue over the last 5 years to become a global leader in telemedicine. Why is this interesting? Why are your ears perking up here, and why are you staying tuned to this IPO?
Well, so first of all, this is, like I said, a COVID play. If you look at their revenues, they were in 2018, 4 million, 2019, 10 million, and they're 29 million before a couple acquisitions. With the acquisitions, it looks like they're about 40 million. So someone that's, I believe, has benefited a lot from COVID. They have still lots of losses, 20 million in losses in 2020, and they're going public. So there's a couple things interesting. They're going public. It's the first large growing Canadian company to take money off the table, and I think they're trying to time it right. I think it's the first cash out for Diagram. So there's a studio model, a very interesting concept, something that's different than traditional VCs, that's making good returns for its LPs and themselves, and it's still relatively small by North American standards. So it's interesting that I think there's a couple companies that are thinking more like U.S. companies like Clearbank or Fair that might get, or even Ritual and Snapcommerce that I think have higher valuations but are choosing to remain private right now. So it's an interesting strategic choice, and I'd love to see what evaluation and how they can use their currency in the next 12 to 18 months to build a faster growing, leading global company.
I love it. So it's interesting because if you're a Canadian founder, entrepreneur, innovator, investor, you want to think big. You know where you can surround yourself with other entrepreneurs like that, Alex? In the TechTO Insider Membership Program, a membership program that offers you the knowledge, the network, and the inspiration to help you thrive. Have there been a new member that you wanted to highlight or profile in an upcoming email that you want to shout out right here, Alex?
Oh, putting me on a spot. I'm gonna plead the fifth yet. I haven't seen who joined this week yet.
Okay, lots of new joiners, lots of new lifetime members. We're happy to have you. Super excited that you are here and hanging out with us. You ready for the next topic, Alex?
Let's go.
Next up, we have Wrapbook wrapping up a $27 million round from A16Z. Alex, what's the wrap on Wrapbook?
So first of all, Wrapbook's, unlike the last two companies, most people probably have not heard of our ecosystem. They are a dual headquartered Toronto, New York-based fintech company focused on the entertainment industry.
So entertainment. So are these like benefits of COVID and the streaming boom with Netflix and Crave and Prime and all that?
I don't think so. I think this is a company that is the right time, right place. And I actually think COVID's probably hurt them because from what I understand, is media production companies was down a lot during COVID. It's a very simple concept when you look at it. And what they're doing is they're providing a suite of tools to media production companies to run their business smoother. So when you start taking a step, you look at the media industry. It's made up of a bunch of companies that have a bunch of projects going on at different times, and an actor community, or basically you have a bunch of different stakeholders that are operating in different projects at once and in different states at once. So it's very complex. So they're making it easy to handle all paperwork, insurance, and reporting for employees, contractors, and vendors. So it's interesting. It just shows where the fintech industry is. 10 years ago or 7 years ago, whatever it is, you start Wealthsimple, go mass market, solution, make life better for everyone. Here's a company that's saying, hey, media productions has a lot of messy parts to it. Here's a fintech solution for this industry, which is big enough. And let's go build the solution for this vertical.
Right. Is this one of the opportunities that you've sort of seen, this idea of bringing, I mean, it's kind of fintech, it's kind of, B2B SaaS software into new verticals. Like, is this a thesis that you have when you're going to market with your fund that you're excited about?
Well, I think there's a general thesis out there that there's a verticalization of everything. So I say verticalization of SaaS, like either workflow tools or SaaS for specific industry is something that you see everywhere. And I think there's another play, which lots of VCs have, is that everything's going to have finance as part of it.
Right.
So that's why everything takes payments now, because there's a margin to be made.
Got it. Okay. So if you've been following Wrapbook, then you've been excited about this verticalization thesis. You've been excited about the fact that they process some payments, and that means that they can take their cut. Didn't they just raise a round?
Yeah. They raised 6 months ago. They raised 3.6 million. And half a year later, they're raising 27 million US.
So did they get the raise wrong? Did they burn through it, or what does that usually mean if you follow up with a big raise right after a small one like that?
Things are going well. I think it's two things. Things are going well, and the market's a bit crazy right now. So A16Z probably saw someone that's hit an inflection curve. Was preempted it. They brought in a couple good advisors, or co-investors, a guy named Michael Ovitz, another guy named Jeffrey Katzenberg, and Uncork Ventures. My guess is most people here know who Michael Ovitz and Jeffrey Katzenberg is. They know something about the media industry. Uncork Ventures is actually one of the best early stage investors. So if don't know anything, but from the outside in, they probably had X number of customers. They saw great retention, great utilization, and then we're growing at so fast a month. They said, okay, let's get ahead of the game and put money in before someone else has a chance to invest.
Amazing. And so if you're part of the community, you're another founder, you're an entrepreneur, you're an innovator, you're an investor in Canada, why is this an interesting development for you? Why are you paying attention to this?
Well, first is we had entertainment TO when we were doing stuff in real life, and we haven't focused a lot on that industry recently. But the film and TV production in Canada, particularly in Toronto and Vancouver, are a huge part of our economies. They employ 180,000 people to generate about $13 billion of GDP. And despite that, we don't talk a lot about those startups. Like, we talk about stuff like Wattpad, but we don't see stuff trying to serve that industry. And we should have a competitive advantage because they're right in our backyard. I think the other interesting thing is this is a dual headquartered company in Canada and the US. And so it's actually much more common than you think about it. You just don't hear a lot about it. So Fair is dual headquartered in Waterloo and San Francisco. Rocket Place is dual headquartered in Vancouver and San Francisco. And so what you usually have is you have companies that have two HQs, one to be near money or customers like in New York or San Francisco, and one for the actual talent in Canada. And they play it off against each other. And it's something I see more and more often, but we never really acknowledge.
Do you like this trend? Do you like the dual HQ?
Well, if you believe in a remote world, does it really matter where your HQ is?
Oh my gosh. It's an unanswerable riddle from TechTO co-founder Alexander Norman. That was awesome, Alex. I just wish that there was a place that we could learn from founders like the ones from Wrapbook. Wouldn't that be awesome?
It'd be amazing. Wouldn't you like to speak with them?
I totally would. And check this out. Coming up soon on April 12th, 2021, we're doing a TechTO Together interactive live stream with the co-founder of Wrapbook. Your chance to come learn about the journey, learn the story, understand the thought process, ask some questions, meet some great people. You'll be there, Alex?
You better believe it.
Better believe it. And then you know where else you're going to be? Oh, what's that?
There's going to be two great firesides that night. The other one is the founder of Wonder School. So if you don't know what Wonder School, that's a Valley-based company that's basically bringing daycare to everyone. I
love it. Very cool. What could go wrong when you trust a high-growth, venture-backed, Valley-based company with your children's daycare? We'll find out soon at Together on April 12th. And then we got another one, Alex. We got founders and funding. This is your show happening on March 19th. You got Shruti and Champ coming on the show. Tell us what to expect from this one.
Shruti speaks even faster than me and is one of the smartest VCs when it comes to AI and machine learning. She teaches at Columbia. She just finds these great founders, and it'll be great to see how she views the world. And Champ is, building a video first company. So it's not a company I typically see her invest in. So it's going to be interesting to see why they got together and how this round's going.
Awesome. And then the last live stream I want to shout out, we got coming up our very first episode of Next in Tech, brand new live stream mini series from TechTO, hosted by Swish Goswami. And this episode's featuring Zane Manji, co-founder at Laser. TechTO community knows him also as the co-founder of Fix, and they are going to be discussing launching your MVP. You pumped for this one, Alex?
Can't wait.
Swish just got some news too, right?
Yeah, apparently he just closed a $2 million plus round to basically consolidate his industry.
Unreal. That is super exciting. All right. Next up, we've got a pretty cool topic. I'm super pumped about it. It is Snapcommerce snapping up a large round. And this is interesting because I could swear to God that this company was called Snap Travel like 5 seconds ago. What's going on here, Alex?
Well, this is an interesting story. Like you said, okay, this is another big round. And so $85 million is large round. They called it pre-IPO round, so they didn't name it. So they're basically saying, hey, next time we're going public.
Is that allowed? Are you allowed to say it's a pre-IPO round?
You can say whatever you want.
It's like saying when you're an undergrad saying you're pre-med. You still have to write the MCATs. You still need to get accepted to medical school, but you're pre-med,
You're sharing your aspirations. You're telling the world, and there's a lot of aspirations here.
Isn't every private round a pre-IPO round for fast-growing tech companies?
Potentially, or it could be pre-acquisition or pre.
Could be a pre-acquisition round. I love it. Or it could be a pre-mortem round.
Yeah, exactly. But again, it's Snap Travel became Snapcommerce, and what's interesting here is they did a round in 2019 of 7 million. So this is a huge jump. And then they were a travel-focused company that just went through COVID. So this is not what you expect to read about.
And so when they pivot, do you think they have to call up celebrity investor Steph Curry and get his input on the pivot?
I heard it was Steph Curry's idea.
Okay.
No, I know.
Awesome. So an opportunity out of COVID, travel market goes down. They've got some great technology. They start applying it to commerce. There's a thesis of what's happening.
Actually, Jason, I'm going to correct you. Yeah. I don't think they've applied it to commerce yet. They said they're going to apply to commerce.
And just the idea of applying it is big enough to lure this round.
Well, they already had some big numbers. They had 10 million customers globally before this. I don't know how much is repeat. I don't know how much revenue was last year. They're projecting this year to do sales of $1 billion. So again, travel, let's say 10% take on that. So that implies that they're projecting 100 million revenue this year. So that could be enough to raise that round. And I guess, and they have a core technology here. So unlike other travel companies, they're not competing with Expedia. They were doing message-based purchasing of travel. So, and I've used them a few times. I'm looking for a hotel. It's basically.
What hotel were you? What'd you use them for? Tell me about where you were. Where were you traveling?
San Francisco.
Okay. And what'd you do?
I needed a hotel. And I know they have some discounts that you can text them and get some offers, and they actually beat everyone else I looked at. And so I used them to save money.
And where'd you stay?
I can't remember the name. Some dodgy San Francisco hotel. It was like some conference there, so everything was sold out.
You're such a great employee, saving AngelList a few bucks and trying out Canadian travel startup Snapcommerce. Okay, so
I hear I added like $5 million to that valuation.
That's right.
Just alone from that one person.
That's right.
Purchase.
Alex's wallet share at work. And so, Alex, I gotta ask. There's also a macro tailwind here on Canadian commerce. What is going on in the commerce space in Canada? Like they're jumping on a bandwagon here that I think is on a rocket ship, right?
Yeah, it's a good question. Like, so you think what's going on Shopify, Perpetua, or Clearbank translate to Snapcommerce? I guess they're staffing up from those companies.
Yeah, there's talent here. There's industry insight here.
I think this is also a bit different story too, because Snap Travel, I think the last couple of rounds were focused on Asia. right? If I remember correctly, they were talking about how they've had made big inroads in China because China was leading in mobile commerce. So I think this is less relying on the local talent, more on understanding mobile and how it's changing commerce. So this might be a passing the baton from some other companies out there and saying, hey, someone has a real insight into the future of how consumers are shopping.
I love that. And we've had Hussein, the founder of Snapcommerce, Snap Travel, and Ad Parlor, come and speak to the TechTO community at each of those roles.
Yeah.
What do you think the lesson is from this sort of pivot round for the TechTO community now?
Well, I think it's understanding, play into your strengths, right? I've never seen a travel company go to general commerce, but obviously they must feel confident they have a unique insight in how consumers will be shopping and how they can shop. And they've taken something and they've redefined their company and made it a much bigger opportunity. And my guess is there's some stats or some insights to back it up. So there's one way to define yourself. Go back to Wealthsimple. They've defined themselves a few different ways over the last few years. But there's what you do is you find your core strength and you play into that and keep on building off of that.
I love that. We actually have a comment here. LinkedIn just blowing up with, I love Wealthsimple too. Thanks, Jamie, for hanging with us. We love Wealthsimple.
Does he work at Wealthsimple as well?
Yeah. You know what? There's only two types of people, Alex, those that already work at Wealthsimple and those that are going to work at Wealthsimple. All right. Now we've, or maybe there's only two types of people, those that don't use Wealthsimple yet in Canada and those that will. So we've got a couple late breaking stories from Shopify that we wanted to shout out quickly. The first, Shopify women are back in BIPOC founders. Alex, why is this interesting for the TechTO community?
So many levels, but first of all, there's always been a question I get from the Valley. It's like, why don't we see more Shopify angels? Why aren't they taking more of a leading role in financing companies? Well, here's 10 senior women that have helped scale Shopify, getting together and saying, we're going to be out there, we're going to be known, and we're going to back, basically, we're going to make it a more inclusive community by backing companies that we want to see and people that we want to see in business. Yes. And we're going to do it. We're going to put our support behind it, and it's not going to be one of us doing it, all 10 of us. And so, and I think it's also just a good role model. We need them. Like, there's a lot of operating angels, but a lot of them don't want to be known. So I want more people to take an example, say, hey, put their hand out and say, I'm actively angel investing.
Fantastic. And then we got another Shopify headline that we wanted to shout out here. Shopify invests in Pipe. Now, this news seems to be a little bit underreported, but what is going on here and why is this interesting for the community?
Well, so this is actually, I'm surprised this is not being picked up by more people. So first of all, let me explain what Pipe is. Pipe is a platform where companies basically take the recurring revenue, like a SaaS company has recurring revenue, and issue debt against it. It's a marketplace. You can say I have 1,000 customers that pay me $50 every month. So that's, what is that? That's 600,000 revenue a year. And people bid on how much they'll lend against that. So it's a very efficient way to raise non-dilutive capital to grow. Mm-hmm. And we've seen Shopify do this before, invest in a finance company. They've invested in a firm and it paid off $1 billion when they went public.
Right.
And I find it's very notable because unlike a firm which was complementary to the core Shopify business, Shopify hypothetically already competes with this, and so does Clearbank. So it's like, okay, Clearbank offers SaaS financing as well. So it was interesting to see them partner with Pipe.
Well, it's a hot market, and I'm excited to see how it shakes out. Alex, what a week in Canadian tech. If you haven't already, like and subscribe wherever you're watching or listening. We will see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.